Hashtag Trending would like to thank Meter for their support in bringing you this podcast. Meter delivers a complete networking stack, wired, wireless, and cellular, in one integrated solution that's built for performance and scale. You can find them at meter.com/HTT. AI brand popularity soars among higher-income consumers. Apple's iPhone Air fails to take flight. Sora is a viral hit, but a financial time bomb for OpenAI. A third of companies plan to replace HR roles with AI. And Microsoft's biggest flop sold 11 copies, and 8 were returned. Welcome to Hashtag Trending. I'm your host, Jim Love. Let's get into it. Artificial intelligence tools are climbing the brand charts, but mostly among higher-income consumers. A new report from Morning Consult shows that OpenAI's ChatGPT and Google's Gemini were the two fastest-growing brands in 2025 in terms of awareness, but only for people earning over $100,000 a year. The story changes radically when you look lower down on the income scale. For middle-income earners, top risers included DoorDash, MTV, and Tostitos. Among those earning under $50,000, the most growth came from brands like Discount Tire and Great Value Frozen Potatoes. AI tools didn't even make the top 5. Morning Consult tracked purchasing intent, the share of people saying they're considering a brand, across more than 2,500 names. Among higher earners, ChatGPT remains the dominant name in AI with 89% brand awareness. But Google's Gemini has quietly climbed from 62 to 78% this year, an interesting sign of how quickly it's gaining recognition. Economists often describe today's recovery as K-shaped, where higher income groups continue to advance while others fall behind. These brand rankings show the same split. The affluent are embracing AI tools, while others are focused on affordability and essentials. We don't often think of Apple launches as design failures, but sales of its new ultra-thin iPhone Air have been so weak that the company is halting production and delaying the next generation version, at least according to a story in The Information, to date. But it's not the only one. Two other recent experiments, the smaller iPhone mini and the larger iPhone Plus, have also struggled to find buyers. Each was meant to fill a niche between Apple's standard and Pro models. None have lasted. The iPhone Air was supposed to break that streak. At just 5.6 millimeters thick, it was Apple's first major design shift since the iPhone X introduced Face ID in 2017. But its sleek form came with trade-offs: a smaller battery, a single rear camera, and a $999 starting price, only $100 less than the feature-rich iPhone 17 Pro. Suppliers are now winding down production. Foxconn has dismantled most of its airlines, while Luxshare stopped assembling the phone in October. Apple had hoped design alone would reignite demand. Instead, the iPhone Air has shown that even the most design-driven company can lose touch with what its customers actually want. And speaking of brand demand, OpenAI's Sora app has taken the internet by storm. The AI video generator racked up more than 4 million downloads in its first month, flooding social media with surreal, funny, and sometimes disturbing clips. But each 10-second video costs money, a lot of it. A recent Forbes article estimated that Sora may be burning through about $15 million a day, or more than $5 billion a year. That's the paradox. Sora is one of OpenAI's biggest successes, yet it's quickly becoming its biggest expense. Each short video costs the company roughly $1.30 to generate, while users pay little or nothing. The result? an app that's growing faster than the business model can handle. CEO Sam Altman has been blunt. There's no ad model in the world, he said, that could pay for millions of people making free, funny memes. The hope is that professionals, filmmakers, advertisers, maybe even Hollywood studios would eventually pay premium prices for high-end versions of Sora. It's a classic tech gamble. Spend heavily to dominate a market before anyone else can. And so far, nobody has won betting against Altman or OpenAI. But this time, the challenge isn't just copyright questions or social backlash, it's the math. If the losses keep piling up, Sora could indeed be a victim of its own success. And whether OpenAI continues to double down, and with the old joke of we're losing money on each product, how will we make money? Volume. But whether OpenAI doubles down or pulls back may tell us if this is its boldest play yet or its first real strategic retreat. In most downturns with huge layoffs, human resources is one of the few departments that stays safe, at least for a while. After all, somebody has to process the terminations. But a new survey from AI Resume Builder finds that nearly a third of companies plan to replace some HR functions with artificial intelligence in 2026. The study shows a sharp jump in automation plans overall. This year, 21% of employers said they'd already replaced specific roles with AI. Next year, 30% say they'll go further, and almost half of those expect to replace between 10 and 45% of their current workforce. A smaller but striking 7% say more than 2/3 of their jobs could go. Now, it's a valid question as to whether this is a skewed result, but the rest of the report makes a lot of sense. Customer service remains the most vulnerable area, followed by administrative and technical support roles. HR and recruiting are both now on that list. This is the surprising turn, given that they usually are the ones managing layoffs and not facing them. Experts say that the trend reflects how deeply AI has embedded itself in everyday tasks like screening resumes, summarizing meetings, and even conducting preliminary interviews. Career advisor Rachel Surwitz suggests employees use this as a signal to upskill, not just to keep their jobs, but to stay relevant. 2 out of 3 employers now say workers with AI skills will have more security. There's a certain irony in seeing HR, the department that processes terminations, become one of the early casualties of automation. Well, at least they know where the Kleenex is kept and where to find a box for their stuff. We've talked about Apple's design misses in this show and OpenAI's success with a design that might bankrupt it. But for the all-time record in product failure, Microsoft still holds the crown. And it's not Clippy. The title belongs to a version of OS 2 for the Mac 20, a software and hardware combo from the mid-1980s that sold exactly 11 copies. 8 of those were returned. Back then, even Windows wasn't a sure thing. Microsoft was still working with IBM on OS 2, an ambitious operating system that meant to replace both Windows and DOS. The Mac 20 was a special turbo card that promised to supercharge aging PCs by plugging in a faster Intel 8286 processor. To support it, Microsoft built a unique version of OS 2 that only worked with that card. A clever idea, but the market had already moved on. Hardware was improving so quickly that upgrading old PCs didn't make sense for long. Between the high cost and narrow compatibility, OS 2 for the Mac 20 disappeared almost instantly. Only 3 customers ever kept their copies, according to Microsoft engineer Raymond Chen. So yes, Windows 11 might be struggling to convince users to upgrade, but it's nowhere near Microsoft's worst moment. And poor Clippy can finally rest easy. There's a much smaller and stranger ghost in Microsoft's digital closet. And that's our show. Once again, we'd like to thank Meter for their support in bringing you this podcast. Meter delivers full-stack networking infrastructure, wired, wireless, and cellular to leading enterprises, and working with their partners, Meter designs, deploys, and manages everything required to get performant, reliable, and secure connectivity in a space. They design the hardware, the firmware, build the software, manage deployments, and run support. It's a single integrated solution that scales from branch offices, warehouses, and large campuses all the way to data centers. Book a demo at meter.com/HTT. That's METER.com/HTT. I'm your host, Jim Love. Have a wonderful Wednesday.